Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Today we don't have significant change on the larger time frame. We continue trading within the previous 4-month balancing range, and on the weekly, pretty much within the weekly range established already. We Towards the end of the session we ate a little bit of the gap left on Monday, but nothing significant. So no change on the larger time frame. On the daily, we see confirmation that the market is pretty much finding balance in this area, and we will give a little bit more detail as we go to the market profile, but no major change from what we saw yesterday, Tuesday. Now on the market profile, I did mention on the briefing that Tuesday session had no excess. I mean, it was an incomplete auction at both sides. Now, the way that Tuesday closed with this upper distribution and holding this 28, 70, 75 level, I thought is if this upper distribution is held, that will give pretty good odds and pretty good chance that we first attempt or try to take the upper side of the balancing range, which had three highs within one tick of each other, and was pretty close to the top of the whole range, which is Monday high. Now, so having said that, my plan was I'm gonna wait to see if we hold this, because that will increase the odds that we will take that. But also, as I mentioned in the briefing, considering that we had a consecutive like 7-week lows, a pretty weak structure, I said if there's any evidence of struggling to extend towards the gap and build acceptance, and we start coming back into the range, that will be a pretty good, pretty decent short opportunity, because you will be re-entering the range. You have a weak structure, and we are basically in a balancing range, and you will be re-entering that, making probably the lower side the destination. That was the initial plan. Now, what happened is that towards the end of the overnight session, so in the transition between the European session and the US session, sorry about that, we had a pretty significant and fast move to the downside that created a situation in which we opened near the other side of Tuesday's range. So when you open in this region, now the odds are good that you will take this side of the incomplete auction, but at the same time, opening back here after settling up here basically repairs, or you can consider as repair all that weak structure. So all that weak structure weight on the odds assessment goes out of the window at that moment. So if we're opening at the 47 area, which you can see around here, you are not in the middle of the range, but you're pretty deep into the range. So at that point, the best strategy, well, at least that was a strategy that I used, I was gonna wait, because you don't know what's gonna happen. You don't have odds. I mean, yeah, you can take this, but you can take this and go up pretty quickly. So I let it play, and I'm gonna use today's profile and today's price action to more or less as an example of how we navigate odds when we are trading the market profile. So the first thing we see in the morning is that we open, and without much hesitation we start coming lower, and we take the overnight high. Now at this point, what I'm thinking is, okay, we are trading down, we completed the auction, the overnight inventory was short. If we don't go back up and rebalance that inventory, that will be a sign of weakness on the market. So as we start moving down and getting close to Monday's low, which is the low of the range, I start thinking, okay, now the odds are getting good that this is an attempt to break from balance, the 2-day balancing range. And here comes the first data point. The market doesn't make it there. It eats a lot of the of the excess left on Monday, but it doesn't make it to the 2880, 2820 area and starts coming back with a lot of strength. By the time of the at the end of the A period, actually at the end of the B period, the situation we have is that the market attempted very strongly to go outside of the range to the downside, but failed to reach the low and went back into the overnight and went back into Tuesday's range. So you have a double failure to break out. Now, if you continue looking, the C high came exactly within one tick of the overnight POC. It was a very mechanical high. And yes, the market moved a tremendous distance on ABC, and on D, it couldn't continue. It had to start pulling back. But notice that the excess left on CD is very, very, very questionable. It's only 4 ticks excess. So D starts pulling back down. What do we have at that point? At that point, we have inability to reach the low of the range, going back into the overnight, going back into Tuesday's range, and now you have another data point, which is a weak high and no excess. So at that point, I'm thinking now the odds are pretty good and are getting stacked to the upside. But obviously, if you get in here, you're in the middle of the range, and that's a pretty dangerous situation. So what I'm going to do right now, I'm going to take out the evening profile just to make sure everything is a little bit more clear. And this is today's session over here. So this starts pullback, and if you were looking closely, and I invite everybody, all traders, seasoned traders, new traders, to watch the replay of today's session, because something really interesting happened. On the E period, you stop the one-time framing up. You take the D low and you start rotating back down. Now, if you look closely towards the end of the E period, when you make this first attempt, at that point, the halfback was around here. When you make that first attempt, you have a lot of give back, going back and forth, back and forth, back and forth. And actually, towards the last few minutes of the E period, you even went back up to 56, 57 area, and that's a lot. That's the upper 25% of that period. When you're rotating back down and you start seeing that amount of give back towards the middle of the range, that's not a very good sign that you will make it to the other side. So that's the first clue. Now, look how the data points are starting to stack up to the upside. Inability to reach the low, going back into the overnight range, going back into Tuesday's range, weak high, no excess, and now you start having a lot of give back on an attempt to rotate back down. Then the F period comes and it attempts a little bit more, but you still see a lot of back and forth, back and forth, back and forth. That's a lot of accumulation of longs. And the nail on the coffin was that one, like towards probably the last 10 minutes of the F period, F attempts to go back outside and clears, it makes a few ticks below the halfback, which was around here, and immediately goes back up. At that point, when you add all those data points together, you have a pretty good opportunity to go long. Because the risk is limited, you can easily set your stop down here, somewhere down here, because you don't want this to rotate back down outside the Tuesday's range. So at that point, F makes it back, and the rest is pretty much history. You start rotating back up when you see the G push, and now you're approaching that weak high with little excess. At that point, you see that the trend day is coming together. So then it pushes, then at this point, the odds are pretty good that you're gonna take this high. And then here's the key assessment for the afternoon. That level, 28.70.75, was the Tuesday's afternoon pullback. And we did say in yesterday's briefing, if we get acceptance below here, that will denote change. Well, what was happening at that point is that we had a pretty uh, far away market that made its way all the way back up here. So what I did say, and we tweeted about it, is if we go back in and build acceptance, basically what you're doing is you're rejecting the whole morning and whatever attempt to go back down. So if you start making acceptance here, the odds were pretty good that you're attempting to take that high, and that's exactly what happened. And then we even closed some of the excess left on Monday. That's the way we navigate. We stack data points after data point after data point. Many times the data points are conflicting. You don't have a clear cut. But I think that today, as the market progressed upwards and make this, did the other return, everything was pointing upwards. It was just about waiting for a good opportunity to join in. Now, moving forward to tomorrow, we took the high, but we settled back inside. So the key question for the morning and the key focus for the morning is assessing continuation outside of this 2-day range, which is now 3-day range. If we don't get acceptance back above today's high and we start coming back in, maybe getting acceptance back below the MN low and towards this 70.75, that could signal a failure to break from the range. And now here's the interesting thing. To the downside, this, which is now a 3-day balancing range, there's almost no daily excess and no excess at all. If you look at it, there's only 2.5 handles, and 2.5 handles for a market that has moved, I don't know, 200 points in 3 sessions, almost on a straight line. This excess over here is very questionable. So if you start failing to the upside and you start getting back into the range, that the odds will increase that you will make it to the downside. Having said that, well, anything can happen because odds are just odds. A little news flow can change the whole situation, but that's the way we do it. We see what's in front of us, we take the data points from the market profile, and we try to make a call with our trades on managing risk the best we can.